Today we're going to break down gold from a technical, fundamental, order flow and sentiment perspective. Also give you some nice educational tools that you can use to apply in your daily strategies as well. Now first thing we're going to look at here is the technical data. So we can see here gold on the weekly time frame has printed this massive impulse. Now after an impulse you obviously expect a correction before the continuation down. Now, if you take your Fibonacci from the high to the low of the impulse, you can see how the market had not retested the 0.382, which is the first level the market should test before continuing lower. Now, we can expect some upward momentum on gold over here for the market to go and test at 0.382 before continuing lower. We can also see how the market in doing so would then also create this head and shoulders pattern, which acts as a bearish pattern in the market as well. Now, dropping down here on the daily time frame, what do we see? Now we can see on the daily time frame how the market created this level of support over there. So we had this level of support created, the market broke below that, and the market had literally been failing to break above this level. But we can also see how the market had been stop hunting here, because normally if you've got, as a retail trader, when you buy the market at that price, where's your stop loss going to be? There. So we had this liquidity grab that had happened over here. You can see all these wicks that we had in the market. It was literally just liquidity wicks for the market, because they need to grab liquidity for the market to move up to the next side. So looking at the sentiment data, we can see how overall 65% of retail traders has got a buy position in gold, and then 35% of them has got short positions as well. Now what the sentiment data tells us is the amount of retail traders, so myself and you, so how many of us are buying, and we can see that the overall the overall percentage of retail traders is buying the gold. And trust me, you always want to be on the opposite side of what's happening in the sentiment data. Now looking at the order flow data, so what the biggest banks, speculators, commercials and hedge funds are doing in the market, we can see here based off the last report how hedge funds went and closed 9.735 K of their long positions. They also closed minus 1K short positions. And if we look at the overall net positions, we can see how the overall net positions has slowly decreased. We went from 250K over there to now at 217K. So the downward momentum on gold is quite expected in the long term. Also looking at the Federal Reserve that came out yesterday, and they made some valid points over there as well. Now first things that we do need to take note of was the US retail index was released yesterday. The expectation was 0.8, the previous was 1.7. However, the market came out and only gave us 0.3 as well. So we didn't get the kind of data that they were looking for. However, going further down the line, the interest rates was also kept at 0.25% as well. Tapering was rose to 30 billion a month. However, Jeremy Powell had said that the long-term interest rate forecast is 2.5%. Now, that's when investors normally, okay, we got 2.5% coming up. So if we invest now at 0.5%, then we'll have a better return, coming up in the future at 2.5%. So you can expect investors to start, adding more money into the dollar, because there's an expectation for the market to grow. However, one thing that we need to keep in mind is that Powell said that the only time that they will increase the interest rates will be when they are at full employment. Also, he also said that the inflation will be above 2% target next year. So they've got a target, and he said that that target will be met next year. Also, like I said, Fed will raise the interest rates when full employment is achieved, and then he also stated that they are making progress towards that full employment. So once that's achieved, they'll start hiking the interest rates as well. So that's basically news from the dollar, because we know that gold reacts to news that comes out through the dollar as well. So the most important thing, just to keep your eyes out for at the moment, is just to see, because we got news data coming out also. But the overall bias for me on gold is down. And if you want a target level as well, you can just take your Fibonacci from the high to the low, from the high to the low over there, and you can use this minus 27 as your target level. So the way I'll be approaching this is, as always, be reactive and not predictive, and learn to adapt to the ever-changing market environment. So that's going to be my target level over there. And like I've always said, that always wait for the market to provide you a nice good opportunity, and don't just buy the market when the market's moving up. You need to wait for some proper confirmation for the market provide you to say that, look, we are ready to go down now. So use your apply the rules of your own strategy, and make sure that you use proper risk management as well. And as always, thank you so much for your time. If you are new here, hit that subscribe button. Don't forget to like, and let me know down in the comments below what topic you would like for me to cover next. And as always, thank you. God bless. Cheers for years.